What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Tesla stock, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day, Thursday, April 25th. All right, guys, Tesla stock here today up $17.45 a share. That's plus 12.06%. Now, of course, listen, this move's coming off the back of earnings. Now, the report itself, the numbers, semi-disappointing, right? But we got comment from Elon that they're planning to begin manufacturing new affordable EV models in early this coming year, or by I should say, early 2025. Now, we did see year-over-year revenue. It fell 9%. I won't spend too much time on this because by now the earnings is kind of old news. We're going to look at the stock. But the revenue fell 9% year-over-year. And that was their steepest annual decline or fall since, I believe, 2012. But the real change, I think, here is that previously the expectation was that Tesla wouldn't start manufacturing the new EV models until the second half of the year in 2025. And now, you know, we're getting word that it's likely to be early 2025. And the market, by design, is forward-looking. Okay? We're interested in what's going to happen, which is why, you know, it baffles me. It doesn't baffle me. Early on, I would see the numbers, early on in my trading, I should say. I would see earnings numbers, and they would be amazing, and the stock would tank, and I would sit confused. Well, the reality is, and this is a very easy rule of thumb, at least in a market like this, and this has been this way for a while now, like years now, guidance trumps earnings. Okay, guidance trumps like the earnings numbers release. So, you know, by that very kind of rule of thumb, you can see a really good earnings release. But if the company comes out and says, listen, we really expect we're going to face some turmoil, there's going to be problems, we expect the next 3 quarters to be poor earnings, the stock is going to tank 9 times out of 10. That's what we got here today, just a reverse, right? We got a nice pop in the stock due to more or less guidance, that news, right? Do not overcomplicate earnings reports. I think so many people overcomplicate them. I look at how are the numbers, okay, for the immediate move, well, compared to more so what was the expectation out of the market. Okay, if the entire market was expecting some ridiculous beat and the numbers met, you know, typically it's going to be disappointing. But on top of that, look to guidance. It trumps everything. Well, listen, this is enough talk. Let's move on. Let's take a look at the actual stock, the bias that the market gave us today, starting with a quick volume profile analysis here on the 5-minute. I just want to look at this kind of like fade, pop, fade off the open, and then we'll kind of move on and take a look at the psychological levels now that we're in kind of a different range. Listen, guys, if you haven't done so already, please, I'm regularly covering Tesla. Subscribe to the channel, helps out tremendously. Now let's take a look. So we have, I can already see a very normal open. Okay, contextual, high volume on the open, and then a fade. However, the shape is normal, but the volume itself is tremendous. But that's not unexpected. I mean, listen, we saw what happened with the earnings, right? When you see a move like that, you're going to have a lot of people making moves immediately off the open. This happened to be what was likely trimming going on. So I'm not going to pay too close of attention to that first candle being red, since really, if you look at the actual movement in stock price, it wasn't all that tremendous, especially considering the recovery that we got after the fact. So we saw that pump upside. You know, we got a little bit of out of context green volume as it peaked. However, guys, listen, the stock was trying to break through this 166.50 to 167 range. We got all the way up toward 168 and quickly faded. So honestly, I'm not going to assign much bias here because we expect volume to be a little bit higher on those peaking candles, especially when you see that big wick, right? So I'm not going to assign much bias there. But on the flip side, you know, bulls and bears, I guess both you guys, this big fade here, if you're a bear, this big fade was the widest range of the day, right? So ideally, you bears would want to see some pretty considerable bearish volume there. bearish bias, I should say, we didn't get any, right? It faded hard, and this volume was extremely contextual for the entirety of the remainder of the day. We got a little green pop here. It's not enough for me to look at that. It's just very contextual, which to bulls, I would argue is better than the alternative, right? Better than the other option of seeing massive bearish bias through this downside move. To have the price action did what it did. It's over, right? It's done. To not have any bearish bias, though, is a better scenario than having massive bearish bias. Okay? If you're a bull, of course. Now, let's move on here. Let's take a look at the psychological self-fulfilling prophecy levels starting here on the 30-minute chart. If we take a look, you can see that we headed into the close yesterday, into earnings, sitting right above the 50-period moving average here on the 30-minute, and we quickly popped through the 200 period. Now, heading into today, we put some separation between the stock and the 50. I'm sorry, the stock and the 200 period. The 50 got yanked upside over the 200 period. The crossover itself, right, to me, it's meaningless. It's overhyped. What is meaningful to me is the fact that we now have the 50 period on the 30-minute, a very heavily watched combination, getting up toward the stock, which has the potential to act as at least a psychological area of support. Now, we haven't seen a retest of it yet. Okay, if we see a retest, bulls, I don't mind what volume we tested on. I just want to see a hard high volume bounce away, kind of claiming that as a at least short-term support level. Now, we'll talk about this 160 when we get to the daily here in a second, but bulls, another thing I'm looking for is I would like to see that 50 period cross over and get above 160 just to increase the strength of that potential level. Bears, we want to get down through, of course, not only 160, but getting down beneath, again, any retest of the 50 period. You want to see that break on high volume, ideally with confirmation, which means a low volume retest and then a high volume rejection. All right, let's take a quick look here at the 4 hour. Now, if we look, too zoomed in. If we look here, you can see that we reclaimed off of earnings here. We reclaimed that 50 period on the 4 hour chart, which has been a struggle for the last couple of weeks. But of course, we had earnings. It did so after hours. Okay, the volume was good, but it wasn't like off the open volume. Okay, but this morning, right, in the first half of today, we made a retest of the 50 period on the 4 hour and we held it. Bulls, that's a very good thing to see. Okay, moving forward, any retest, still want to see that hold. I want to see that 50 period starting to flatten out so we can return to an ascending position eventually. All right, but bears, a crack downside is really all you're concerned about, getting back beneath the 50 period when it comes to the 4 hour in particular. Let's take a look at the most important chart of all. It's going to be the daily. Okay, you can see here the moving averages. You know, the nearest one is just around 176, 176-ish. Listen, understand the ultimate goal is really bulls to get outside of 177.50. That's really what I'm calling that region, which also means above the 50-day. That'd be a big deal. But more importantly, the next steps here, any retest of 160 bulls, I want to see 160 hold. Okay, 166.50 to 167, that's kind of a small range that I'm looking at as a singular level. That's kind of the next area I'm looking to crack. Weren't able to do so today. That would be a great reclaim. Those stair steps, right? One step at a time, but we have kind of a tight range of very obvious levels here that I expect a lot of people and a lot of institutions are kind of paying attention to. So one step at a time, break a level, claim it, hold it. Break the next level, claim it, hold it. That's how this needs to look. Whereas, you know, you bears, primary concern here tomorrow, if you guys can break downside back beneath 160 and hold, that's a great thing to see. That opens you guys up for a downside test of 154.50 to 155. All right. Implied volatility, guys, as we discussed in depth a couple of days ago, IV tanked after earnings. This is very normal. Okay, this is very normal. So if you owned puts, you know, not only were you incorrect directionally, but you also probably got a little bit smacked on the IV crush. That's why, you know, you may have lost more money than you expected if you do the delta calculation. If you owned calls, you were correct directionally, you were likely still profitable, okay? But you may have made a little bit less than if you only ran the delta calculation. Here is the culprit, right here. It's very important to understand how IV ties into the pricing of your options contracts. through the Greek Vega, right? Incredibly important to get that. But listen, bulls, those of you who owned calls, congrats to you guys. On a move like this, most contracts likely easily outran that IV crush. Now, let's take a quick look here at expected move. Let's see what we got. Now, April 26th is the next Tesla expiration. That's Friday at the close. So the expected move by Friday's close compared to today, Wednesday's close, is plus or minus $6.13 a share. There are no earnings, of course, between now and then. We just had those. So if we realistically divide that number by 2, that gives us about $3.07 of expected movement by tomorrow's close, but we have to add 50% back to that to make up for the fact that that assumes a streak, right? So that gives us red or green streak. That gives us an expected move of approximately plus or minus $4.60. That's approximately, with a little bit of guesswork, since we don't have the luxury of daily expirations, what the market expects in terms of movement by tomorrow's close compared to today's close. It's the one standard deviation expected move. Of course, that's the market's volatility expectation. So the reality here is, guys, that should be used as a baseline, okay? Not for here's what's going to happen. The way to use that is, okay, that's the market's expectation. Do I agree with that, or do I greatly disagree with that? And if you greatly disagree with that, you think it's going to be way more or way less, that's an inefficiency you can look to profit off of, okay? Now, let's take a look. The final thing we'll do here, directional bias, bullish or bearish, out of the options traders today. We had over 4 million contracts traded today. 1.86 million of those were calls, 2.17 million were puts. So a small bearish bias on the overall ratio. And if we look at the short-term speculators, 696,000 calls, 1.049 million puts. So we are seeing a bearish bias out of the short-term speculators. That's just what happened here today, the 0 to 20 delta range. So listen, guys, I'm covering all of this daily here on Tesla on the channel. Again, please subscribe to the channel, helps out tremendously. If you do like the options data, I've been tracking UOA out of personal interest every single day I've been doing it for years now. But I offer that within the last couple of years as a service to Gold Plus UOA and Platinum members, part of our group. So, the reason, the unusual options activity, it's how I keep track of what I suppose you'd say the whales are doing. Big retail traders and investors, funds, institutions. I want to know where big money's moving. So if you guys want to get those alerts, they go out many times every single day. And it's all, by the way, human verified. It's not bot driven. It's handpicked by me and verified by me and then pushed through using a bot to retitle the alert so that you don't have to necessarily open the app. You can just get the push notification. You take a look at that at the link in the pinned comment if that sounds intriguing to you. I appreciate you guys, and I'll see you in the next one.